that as much as, card fees have spiraled out of control, chargebacks have really increased for a variety of reasons. OTAs, immediately refunding guests, no questions asked. There's also cases where, for instance, in hurricane zones, if people hadn't bought travel insurance, what is the first thing that they do? They call their credit card company trying to get paid back. And so just offering an alternative way to pay that doesn't have the ease of guests disputing those charges can really help protect property managers from losses due to fraud and other gamesmanship that happens with guests because they're using cards.
Give me back that money, please.
My being like such a macro.
You've tuned into another episode of Straight Fire VR.
We are locked and loaded with the vacation rental industry in our sights.
Our skilled expert shooters today are Matt Golis, founder and CEO of StretchBill, as well as Ryan Bailey, CEO and founder of TravelNet Solutions. Covering our sixes is Amber Carpenter, Vice President of Product at B-Trips, as well as Adjunct Professor at Brown University and Oregon State University. Calling the shots today is Steve Milo. Steve, when you are ready, go ahead and hit your mark.
Yes, thank you, Heather. Thanks, Matt. Thanks, Ryan. Thanks, Amber. As always, we start off with a virtue signaler warning that this podcast is not for those who virtue signal on LinkedIn. We're going to have real talk about real issues. So this is not your podcast. And speaking of that, so Amber, the last time you were on, it was a controversial episode where we talked about Airbnb, Marriott Homes and Villas, Casa, bad franchise models, and even generational differences in the vacation rental industry. But the one that generated the most controversy was my discussion of a company called Pertinier and saying that they had gained likes from Pakistan and India. So Jeremy from Pertinier asked for a clarification retraction. Quote, "We never farmed likes from India. We grew very targeted audiences for our clients years ago because it didn't make much money." And an email from 2012, Pertinier said, quote, "I will say this, there were other companies getting likes from India, but it was probably more expensive than what we were paying. We would advertise click like if you loved this destination. Facebook shut this down at a flash sale. Get fans fast. Dear Steve, we have 10 spots available for this flash sale. You can get 25,000 likes for $15,000, 50,000 likes for $25,000, and 100,000 fan likes for $50,000. Limited time offer. Hurry soon." So I sincerely apologize for saying they got likes from India or Pakistan. Perhaps I missed the wrong continent. I don't know if that's a business model that TNS is looking at. Likes for, it looks like a lot of margin on those likes. But at any rate, I wanted to talk about something more pressing and serious here. So we all came back from the VRMA Association in Orlando. It had about 2,500 attendees, over 100 vendors, and I think we got a lot of great feedback even on the podcast. And there was a lot of things that I think are interesting to unpack. So I'm going to start with Amber here. Amber, what were your observations from the VRMA conference in Orlando this year?
Honestly, I came away just feeling like I wish I had had one more day. There was just so many great sessions. There was just a tremendous amount to get done, and it feels like the conversations were more advanced than they had been in the past, to be candid. It just felt like there was a tremendous amount of energy in the room, and everybody is really rolling up their sleeves to get ready for a strong 2024. A tough, but strong 2024.
Hey, so Matt, you've been at the VRMA International on and off for close to 20 years, and now you're starting back as a vendor with StretchBill. In full disclosure, I'm an angel investor in StretchBill. I know that's a good word in front of my name, Amber, so angel. But Matt, look at her. She's smiling a little. This is good. Matt, so what were your observations of VRMA?
Well, I mean, having seen it from 400 to 500 attendees to over 2,500, I mean, I echo Amber's comment. I mean, the energy of just having that many people who are so excited about the future of the industry was really contagious. It was great. I thought it was one of the best trade shows. I mean, from a vendor perspective, just as far as the layout, it was very open. It was very easy to have conversations with property managers, and I think there's a lot of interest for new technology solutions. It seems like a lot of still new vendors, new technologies coming to the market, and there's just no shortage still of great ideas that can help move the industry forward. So it was great.
So Ryan, you had a pretty big presence there. I heard over 30 TNS employees. What was your observation? Because you've been to quite a few of these conferences, and this was certainly right up there with Las Vegas in terms of attendance.
Yeah, it was fantastic. It was great. I think for us, being in and through this industry for so many years, I think the one anchor, the one sticking point that rings true from the beginning all the way to now, even more so now, is it's still about the relationships. I think the ultimate kingmaker it's all about relationships and building those relationships. And it's just a great time to be able to do that. Everyone says they're innovating. Everyone wants to innovate. And the competition is more real than ever before in this industry with the capital coming in and the consolidation. And so that's exciting to be able to see the industry move forward from an innovation standpoint. And so it's all about the relationship. And the innovation is real, and it's even more so competitive today than I've ever seen it before. So.
Yeah, so I had some time to go through the vendor showroom, and one of the things I did was I talked to vendors and said, what are your thoughts on this show, and are you selling or are you getting looks? And quite a few of them said, hey, definitely property managers are tightening their belts. There doesn't seem to be as much willingness to commit to new services or product as there was even a year ago. And a lot of talk about cutting back and in some cases how they believe, some of the suppliers in the vendor showroom, some would even be here in Phoenix next year. So there certainly is, headwinds, right? So this industry is facing some headwinds. We talked about it in the last episode with Michelle Marquis and Jeff Robertson about how this industry really hasn't faced this level of downturn since 2008. Granted, COVID, but that was a little blip. I think we're talking about when the housing market really slowed down. And so one of the things that's happening is consumer credit is tightening. And that's partly why I wanted to have the three of you on, because, payments, credit, and payment processing are all part of that. So without making this too much of a commercial, Matt, tell me why you think this is important at this point to offer alternative payment processes as we start to face real consumer spending limits.
Yeah, so you're absolutely right. I mean, so the impact of inflation on the economy is really hitting consumers from a standpoint of their ability to make a large ticket purchase like a vacation rental the way they could a couple of years ago. And we see an opportunity to offer an alternative to what we would consider predatory lender type products. So some of those may be credit cards that are charging 20% plus APRs for as long as the loan's outstanding. Some of them could be online predatory lenders. Some of the buy now, pay later companies who are making money for as long as these loans are outstanding. And the headwind for the industry for guests who consider those types of options is that if they're still paying off those loans after their stay, it really ties the hands of them being able to be a return guest. And so where we see an opportunity is with really offering split payments, the ability to split a vacation rental into 4 payments over a course of 6 to 10 weeks, where it's always paid before arrival to protect the property manager so that they can cancel the booking if one of those payments doesn't go through. But I think just from a macro perspective, already vacation rental managers are experiencing, slowdowns in some of their advanced bookings. And to offer a way to differentiate themselves for direct bookings versus OTA bookings, this is a great way that it both helps them save money, but more importantly, attracts guests who need that flexibility to pay over time. So I definitely see an overall trend away from people using credit and lending products, quite honestly, that credit's not going to be available the way it was.
Yeah, so we've had a number of conversations with OTAs at VRBO. They're all pushing us to have, very flexible cancellations, which of course creates no risk for the guests, and it's just not even feasible for seasons. So these issues with creating alternative payments and payment timing, and even being able to pay by different groups within the party become critically important as people have tightening credit. Amber, I remember talking to you about Frank Langston, who had this concept of pay by group. And I said, well, he kind of disappeared. And then you corrected me and said, oh, no, he had an incredibly strong exit just in the sports arena. So, Amber, what can you tell me about payments? And what can you tell me about some of the things you're thinking about as we move into a lot of the headwinds in 2024?
So what's been interesting is during COVID, you saw users flip, and people were, for years we had seen mobile device usage really increase on our websites, but the transactions weren't there. And during COVID, it went back to desktop. Everybody was using their desktop. It was 70-30 desktop. We're back to 70-30, 60-40 mobile. What's been interesting is that the conversions are, at least in the last about 30 days or so, about to 50-50, where mobile payments are actually picking up quite a bit. Like, people are going ahead and finishing their transactions, at least in our newest, most mobile-friendly sites, are finishing their transactions on mobile, where we didn't used to see that pre-COVID. So that's pretty interesting. So really focusing in on what it takes to continue to push that those mobile transactions can finish on mobile as much as possible, looking for payment processors and technology solutions that allow that to occur. I do, speaking of generational gaps, I do have, I do believe that there are people that want to see a different and more flexible payment schedule. I agree with Matt in that sense, and how they get there. I also know that some of the younger generation refuses to even have a credit card. Getting them a bank account is incredibly difficult. So I think the true strategy needs to be, how do we diversify and have as many payment types and options as possible to reach everyone where they're at in their own financial situation. In the past, we used to do it by having actual more deposit steps. And that's really hard when your booking window is 60 to 90 days. We don't see booking windows like we used to 6 months out. There are a couple markets, that still have that. But in those short-term booking windows, I can tell you that I do have some 20-year-olds. I didn't know Miriam and my kids were the same age, but I did have them at 18, so I was pretty young, but they Venmo everything. They will not go into debt for anything. They just don't believe in debt, whether it's for school, a car, anything. They're fine with me paying for everything. So maybe we need a button that says, send to mom and dad to pay the bill. But I definitely think that there is a generation that wants to pay cash and only afford it there. So I think even thinking about how we help them plan and budget for vacation dollars, I will tell you that younger generation does invest in travel higher previous generations. So I think it's interesting times, but I do believe that types are still important as well, which we're lacking in our industry. That's something that I'm looking forward to.
Part of the reason why I had you on here is TNS Travel Solutions has made a major investment into payments and payment processing and all kinds of. You actually hired a pretty strong professional from Google. So tell me about your vision with TNS and payment and how that's part of this this whole piece where consumers are looking for a lot of different options.
Yeah, I think it's all about flexibility and hey, look, we haven't minced any words about the consolidation of the technology footprint, and as you saw in the vendor showcase, there's so many different companies that do so many different things on the entire journey in our industry. And, I think the margin for error for the property manager continues to tighten down, and to do more with less, to automate payments is another piece that we believe can help eliminate. Hey, how do you eliminate friction, offer more options, and also how do you continue to eliminate yet another part of the technology stack? So big part of our vision is continue to look at the work streams and workflows of the end user, and instead of clicking in and out of yet another software tool, how do you bring it into an overall platform and continue to add more capabilities and robust functionality to, as Amber said, Matt said, offer more competitive, flexible options to attract and drive conversion, because that's what it's all about, driving bookings, and that's obviously meaningful to the business of the property managers, but it's also obviously meaningful to owner relations to put heads in bed. So that's a big part of the vision, is continue to consolidate that technology stack for our end customer there.
But Matt, as times get tough, and we've seen this as a bad trend, we're seeing more and more fraud, particularly last minute. So what have you done with StretchBill, or what are you thinking about to eliminate fraud and to provide a service that can help protect property managers from fraud that's going on?
Well, yeah, the most fundamental thing is that we're using pay by bank as the payment mechanism for the installments of paying over time. And that unto itself is really a wonderful way to protect property managers from not just fraud due to card usage, but obviously chargebacks. And that was actually one of the biggest themes that we heard from a lot of property managers this week at the VRBO is that as much as, card fees have spiraled out of control, chargebacks have really increased for a variety of reasons. I mean, there's OTAs who are just, as you mentioned, immediately refunding guests, no questions asked. There's also cases where, for instance, in hurricane zones, if people hadn't bought travel insurance, what is the first thing that they do? They call their credit card company trying to get paid back. And so just offering an alternative way to pay that doesn't have the ease of guests disputing those charges can really help protect property managers from losses due to fraud and other gamesmanship that happens with guests because they're using cards. And so we really see StretchBill and the ease of logging into the bank account to make the 4 installments as really a game changer when it comes to online bookings. And as I mentioned earlier, to differentiate direct bookings over OTAs, because you're not going to see that type of experience with OTAs.
So Amber, part of what's happening also as we start to create all these different payment plans and payment options, and even myriad of policies with some of our friends in the OTAs, cancellations become a big issue. And we have discovered that in some cases, when bookings get canceled, we're not getting fees returned to us. Can you talk about how big of a problem that is, and how property managers have to be reconciling their statements with these OTAs and these channel managers to make sure that those fees are getting returned?
Yes, I mean, the ones that are invoicing us, we found a massive issue where cancellations were not being netted out of their invoices, 6-figure issues, really massive issues. And so you almost have to have a full-time person whose job is to monitor that every single month across your channels, review every invoice, and look at every reservation. Same thing if changes are made on a reservation, if they shrink the number of nights. We've actually had to build reporting in Power BI to help us audit it every month because the issue is so massive. It's been terrible. Interestingly enough, on our direct channels, we don't seem to have the same issues as far as a flexible cancellation or making a more flexible cancellation policy isn't increasing our cancellation rate like you would believe. It's mainly an issue with the OTAs that we're seeing that occur on.
So Ryan, on your side, are you starting to work on things that can help make it easier for your property managers on track to be able to audit those OTA fees to make sure the cancellation fee comes back to them? Because as Amber said, we caught 6 figures with one OTA/channel manager, and the more the cancellations go up, right? Because if you have flexible cancellations, people are going to book, cancel. The more that kind of door is open for shenanigans to happen, and at a pretty adverse level for a property manager.
Yeah. From our standpoint, that's why strategically we went in and made the two large investments into building out even more functionality with multiple channels of our distribution engine, the channel management, and how closely connected that is into the payments. So doing both payments and the channel management natively integrated into the system connects all the way down to the folio, connects to the guest contract that they sign, so it can help in chargebacks, recording phone calls, and really building out all those audit logs and the functionality to have compliance reporting is something that we believe is, the challenges that you're explaining and saying are definitely part of our vision and strategy to help consolidate the technology footprint. But you're also talking about automation. How do you use ways to drive the compliance and those audit logs around when you're talking about hiring full-time human resources into mundane, repetitive tasks, quality assurance, which isn't inspiring in our industry, right? And so how do you use AI? How do you use some of these other tools that we're building to bring it all together to make sure that, hey, that's why we're making the big investments into payments, is money's in the financial side of the track product is a critical component to your business. And so we want to bring all that together rather than being in disparate systems and disparate reporting and multiple of the other issues that we could sit here and talk about for days around having these disparate systems, disparate reporting, and trying to hang it all together. So definitely it's what we're building now, and it's a big part of our future as we look forward in 24 and beyond. So
another thing from VRMA that I found pretty interesting was the presence, or the increased presence, of Booking.com. And Booking.com basically entered the space, I don't know, about 10 years ago. I kind of became aware of their presence. It was really small at that time. I know Matt kind of vaguely remembers Booking showing up. It was almost impossible to list with them. We were aware they were big in Europe, but they were very small in the United States market. But they've been diligently kind of working to get better results, better branding, better marketing in the U.S. market. COVID kind of caused them to pause a little, but over the last couple of years, they've really made a push. So, some of the numbers I've seen is that the Booking app now, depending on whose data you look at, has more downloads than the Airbnb app, which is pretty incredible. And that even in the U.S. market, there's more downloads for the Booking app than the Airbnb app. So I think what was interesting is there were, some pretty high-level executives from Booking.com, Ben Harrell in particular, who was on stage with Tim Rosario over at VRBO/Expedia, being interviewed by Matt Landau. I think he was pretty candid about some of the opportunities, some of the challenges in the U.S. market. And I also had a chance to meet with quite a number of the Booking.com executives. Counter that to Airbnb, where the highest titled person from Airbnb was a director. I just am curious, Amber, what your impression of Booking.com is, and how Airbnb, which seems to have a pretty big component of property management inventory, doesn't seem to want to send leadership to the VRMA conference.
So interestingly enough, I was in all of the meetings. I feel like Booking.com's investment in entering this space is much higher. They approach it very differently. It feels more like a partnership. When you're sitting down in the room with them, they are working through it. We had a lot of conversations about their integration with Track and kind of where they were at. It feels less adversarial. Every meeting I've been in with Airbnb feels more adversarial. They don't send their leadership down. But I think it's because their leadership has been pretty clear that they are host-centric, that they make most of their money from us as professionals, but they're very host-centric. And so I think they're living up to their word of who they are in the industry. I think they've done some good things for us. I mean, their booking trends are have dramatically changed over the last year. We used to get much shorter stays for lower ADRs and smaller units. We're seeing a completely different Airbnb performance. So to be honest with you, this would have been a great year for their leadership to show up and have candid conversations with us. I think we would welcome them. I don't think that you would it wouldn't be like the TripAdvisor show, Steve, where you dressed up as their mascot and terrorized them. So I hope they do come to the table in a completely different way in the near future. I think the people on the ground day to day try to be partners with us, but it's just not that's not their presence in the marketplace, is to be our partners, in my opinion.
Yeah, I just want to clarify, I never dressed up as the TripAdvisor mascot. I wore a t-shirt with a decapitated owl head, which was their mascot. So, that was something I thought would be entertaining. A couple of people thought it was funny. Hey, Ryan, so back to booking.com. We heard that integration between TNS/Track was imminent, so that we'd be able to integrate with you similar to the way we do with Airbnb and VRBO. What are you thinking? Because this is a big deal that I've been pushing pretty hard for.
Yeah, absolutely. Well, we're really, really excited about booking.com. And I think even what Amber was saying is, if you go to the core of their business, I mean, booking.com has been built and bred as they in the relationship. I mean, think about it. They work with hoteliers. So they're used to working on the ground level and working with the end market in those relationships. Airbnb is, as you said, host centric. So, I mean, if you look at the way where they're born and bred, the rental by owner versus knowing how impactful it is to go after the professional. I think there's just a really close, beautiful relationship there and synergy there that booking.com, I think, can continue to bring to our market. So it is imminent, our connection with booking.com. It comes in multiple different phases. So we've crossed several of those gates to open this thing up here, and we're very, very close. Got a few customers in beta, and we're hoping to launch that in December and in January of 2024. So we continue to talk to property managers, not only V-Trips but others, and just seeing the impact of booking.com on their just year-over-year growth in terms of their the consideration at booking.com and the amount of revenue, the percentage of revenue that booking.com is driving in comparison to Airbnb and VRBO. It's they're here to stay. They've tried to come into the market a few different times, but booking.com is, hey, look, they're $100 billion market cap company. So they're massive, obviously, in Europe, and I think they're going to continue to make a big push into the North America region.
So Matt Golis, you're a numbers guy, and I know you've traveled through Europe. So listen to some stats that I got from Key Data about European booking source. So these are, from OTAs in Europe. In 2021, Airbnb represented 48% of European OTA booking source. In 2022, it was 46%. And in 2023, it's forecasted at 41%. Booking.com in 2021 was 40% of the booking source. In 2022, 46% of the booking source. And in 2023, forecasted at 51% of the booking source. So my question to you, Matt, is why isn't Airbnb more concerned about this? Because I cannot believe they didn't send a senior level person to this conference. I tried to get someone. I know I was working with the executive planning committee. We wanted someone on stage with Expedia and booking.com, and they just ghosted us in terms of sending someone. So how is it possible that they're not paying attention to Europe? Because I would not want booking.com on my heels.
No, you're absolutely right. So there's a few things going on. So first off, one other observation I've had about the industry is this dichotomy between property managers and hosts. And as I was mentioning to someone at the conference, host is a 4-letter word in VRBO. Meaning that, we're about property managers. We're not about hosts. And I feel like, Airbnb is suffering from obviously, these city by city battles for just relevance and ability to operate that they're battling in Europe. And so that's going to obviously affect their booking volume. The other one though is that, they rely heavily on native traffic to drive a lot of obviously their bookings, right? And so if you really target a younger demographic and you rely on native traffic, the opportunity for you to book with Airbnb is really just within Airbnb. So you think about, booking.com and property managers in Europe who are used to using many channels to attract bookings. Inevitably, that's going to affect, Airbnb's ability to be sort of a proprietary destination for those bookings. And so I think they're going to continue to see pressure. I also feel like they're going to hit a supply resistance where there's only so much supply they can add at this point in time because they're not able to operate in all the cities that they used to operate. And so I think all those things are going to play into Booking.com's favor. I mean, obviously, Booking had a presence there, been a leader there for a long time. I also feel like Booking relative to Airbnb understands the market so well because they're used to working with big brands and big operators in other, obviously, travel and hospitality categories. And so I think it's easier for them to understand our industry relative to Airbnb. And I completely agree. I mean, I can even remember the first time that Airbnb came to a VRMA event. And I think it was barely the general manager for vacation rental. And it was just, this tiny department where they just kind of saw us as this kind of niche, tiny part of their business because the people that were still hosting, their second bedroom were their core market.
Well, we could talk about Airbnb and Booking.com for an hour, but we have other topics to go to. So interestingly enough, Google was back at VRMA. They seem to come every 5 years. I didn't really kind of understand, other than a high-level presentation, what was being presented to us. But just 2 days ago, Google released a press release talking about a price comparison engine that I guess they're going to toggle on to Google Travel. So Amber is our resident Google expert. So Amber, can you make sense of what's going on at Google? Because when we've tried to get through to them, they've basically said it's like a 2-year wait. And it's almost impossible to get a human being to communicate. So what is going on at Google Travel?
So to be fair, they've had a lot of changes in their leadership, and the humans they were able to get a hold of were very nice. But they didn't want to have any new direct connects built. At least that was implied. I don't see an actual rate comparison engine. What I've seen change, Steve, is that in the past, they had a ton of duplicate listings. So if Blue Pillow and Whimstay and NextPax and everyone else was sending listings for the same unit, you'd see that unit 12 times, like however many channels it was in there. It's now more like hotels as of this week. If you go into a unit, you don't see, or you go into search results, you don't see those duplicate listings anymore. And it's actually showing you the price on every channel for that one listing. So it does look like they've deduped. And actually the price comparison is in the listing itself, like a hotel where you can see what it costs on each channel in that one room type listing. So that's changed as of this week. I haven't seen an actual price comparison widget or anything like that. I just see the price comparisons on the now deduped listing level. They also, there's a lot of things about the channel that I wish they had a more open dialogue and listen to some of us that are in the industry. You still can't put search by more than 10 guests. We have a tremendous amount of inventory that holds a lot more than 10 guests. They've removed the brand logos as of this week. Those have been removed from the search results. So it used to be that you would see the brand, the property management brand, or to be honest, the channel brand, depending on how you got your inventory on there. That also got removed with the changes this week. And another big issue I have with the channel is they call our condos apartments. So they have no condo category at all. So if you go in there and you do a search for destination vacation rentals, to find the condos, you filter by apartment. So it just feels like they're a little bit disconnected and still trying to figure out our space versus hotel content. I could go on and on. One of their main search filters is cribs. Maybe they're seeing that in the categories, but there's a lot of work to be done on that channel for sure.
So Ryan, I know there's a wish list from your clients. I'm sure you've seen the list, but Google Travel is on that. Is that in your product roadmap to try to get an integration with Google Travel?
It is. Yeah. Up next after that is Expedia and then Google Meta. So, but there's items to work through. The laundry of items that Amber was just talking about are all the things that we're looking at through the API. And is it, are all the listings clean? And, there's just a myriad of issues that we're seeing right now that we want to make sure that it merchandises our customers' properties and units properly. So, but yes, it is on the roadmap to be done in 2024.
So Matt, we're going to talk about something else. In a previous podcast, Amy Hinote was on, and she said that private equity destroys innovation. Now you've seen both sides of this coin, and I just curious because you were with Yapstone Rent Payment. Obviously, you had a private equity investment at a critical time to allow you to really incredibly expand. But then in some cases, they may have made some missteps. I met the new CEO. It's like the third or fourth in quite some time. What are your thoughts? Do you agree or disagree with Amy Hinote on this?
Well, I almost agree, but not quite. So I would say it stifles innovation, meaning that, in many cases, private equity is coming in just with the intent of cutting costs or consolidating functionality, but rarely are they necessarily looking at, innovation, product roadmap, what are the ways that we can continue to be a small, nimble startup, right? Usually private equity is only coming in once you're at a certain level, right, of growth and revenue. So it can be a super positive. There's certainly shops that help you grow. And in that case that you just described, it was building out the infrastructure that we needed to do a US and European rollout with one of the major booking sites. But I think in general, and again, I'm a serial entrepreneur at heart. So I always think of the fastest way to growth is to have a small, nimble team that moves fast and breaks things and really tries to make a difference in the industry. And it's just hard when you're a larger company to keep that innovation moving as quickly as you did when you were smaller and nimble. So that's where I kind of view it as it stifles, but not completely kills it.
So Ryan, you had a recapitalization event with Blue Star, a company that is in some case partially owned by Jerry Jones. What's your thought? Do you agree or disagree with Amy Hinote's statement that venture capital kills innovation?
Yeah, I think it's like any business, right? It's like even companies in our industry, does it, depends on the leadership. I think it depends on the partner, who your private equity group is. That you're partnering with. I think it depends on where you're at in terms of the value creation curve for the organization. Like, hey, look, my brother and I ran this thing for 20 years and everything we built, we bootstrapped and got banks to give us loans. And I can tell you in our own experience, bringing on Blue Star Innovation Partners, I mean, you're not sitting here having 10, 12 developers with Charles and I with 2.5 product managers. Now you have 10 product managers. And like Twilio has these micro teams and you have a micro team only working on payments. So when Amber wants new functionality in payments, I don't go, hey, can you go pull the developers off the core PMS and put them onto payments? It's like you build these own individual teams. So for my experience, and I've only had one experience with private equity, but my experience has been, hey, making the investment to realize the growth, to realize the investment, to realize that journey. And for me, it has given us some significant tailwinds that we couldn't afford to do ourselves, to build all the product and engineering team to reach all your demands, Steve, to make sure we build the best platform in the industry. So there's a lot on the roadmap, and I think for us, it's been private equity's been super helpful to continue to invest and build out the functionality for the enterprise. So
Amber, you've been kind of caught in the midst, somewhat like a dolphin in a net between private equity and venture capital and companies that were startups. What's your thought? Do you agree or disagree that venture capital kills innovation?
I think it changes the conversation, and it's change, right? Change is chaotic for anybody. And so I would say the majority of what I've seen is when you sell your company or you bring in these big investors, it slows things down. I don't think it kills it, but it definitely slows it and it changes it. There is a lot of cost cutting at times. There's a lot of these companies are looking for efficiencies. And so, even just being an entrepreneur who has sold, some technologies, not to private equity, but to other private companies, the innovation slows down because there's this moment where you have to reorganize yourself and say, how do we grow? And there's a lot of conversations going on that, maybe you didn't question how much that payment initiative was going to cost in the past because you just knew you had to do it when you were bootstrapping. But then you have to justify every single thing and it becomes a different conversation. So I definitely think it slows it down. I'm eager to see things come out differently. I think a lot of the consolidation that's happened in the past in the industry slowed down every single one of those platforms. And you're just now, years later, starting to see them come out with new functionality. So I've never seen these changes be incredibly productive in the short term. In the long term is where I think I've seen some of them be very fruitful.
Okay, so we're going to do lightning round now. So quick answers. So my question, I'll start with Matt. So more or less the industry changed for the better when we went transactional. Somewhere around 2014, we went from a classified listing model that was HomeAway and a bunch of other listing sites to transactional, and I think that was a watershed moment. What has been the latest pivot? Do you think it was the purchase of HomeAway by Expedia, the sunsetting of V12, COVID-19, or something else?
I actually think it was the acquisition of HomeAway by Expedia, because I feel like it both validated that major players were coming into the market. It validated that this was a big market that was going to get bigger, and they were going to put the money behind it. And of course, Expedia, having been in a variety of hospitality markets, I mean, they've always been transactional. And so it kind of brought that transactional focus and execution to the booking experience. And now here we are in a world where there's multiple OTAs in the vacation rental market. We also have property managers who have moved to knowing that they need to compete in a transactional mindset. So yeah, I think that really was the watershed moment. I think COVID, we're already talking about how certain things are going back to the pre-COVID way of doing it in 2023. So I mean, I feel like that was still just kind of a blip in our history, but yeah, I think that really forced the industry to really professionalize, for sure.
So Ryan, what's your thought?
Yeah, I agree with 100% with Matt. The sale brought into, not only it was already in the public limelight, but the transactional, and moving it from a listing model to driving more of the transactional, which then started to bring more notoriety, which then brought investment capital in, and you started to see, okay, Expedia acquiring HomeAway, and then private equity coming in, rolling up some of the software. And that was just a watershed moment, as I agree with you guys, that HomeAway acquiring Expedia definitely started to bring more capital and view into our industry, which gave us all the opportunities that we're in right now to continue to move the industry forward. So,
Amber, do you agree, disagree? Another answer?
No, I completely agree, except that I'll add, I think they continue to have a tremendous impact because they broke VRBO this last year. I mean, the transactions from that channel have gone in the gutter as they were trying to swap out the infrastructure. So that investment has just caused a tremendous amount of change. Ryan's point about how they were rolling up the software created so much opportunity for competitors to come in and become the leaders in that space. Just like right now, I think they are actually creating And they're creating an opportunity for the booking.com, for the Airbnbs, for whoever's next around the corner, and for people to have to relearn their direct booking strategy. I mean, I think that got lost in COVID-19. I think the only thing that happened with COVID is we got a huge jump in visibility with travel consumers who didn't know we existed. I think that changed and bought us 5 years of growth in that audience. But I still think that Expedia's decisions and pivots are making the biggest ripple in the industry right now, good or bad.
All right. Well, what's interesting is none of you said Marriott Homes and Villas coming into the market. So, that's take that for what it's worth. Our audience, we're fair and objective. I see a lot of smiles. All right. Well, that's it for this episode of Straightfire VR. You can reach us at straightfirevr.com or at straightfirevr@gmail.com. Thank you, everyone, for a great episode. Thank you again.